This RealAg Radio podcast episode is brought to you by Focus Herbicide from FMC. When tank mixed with glyphosate, Focus Herbicide provides a complete solution. Broadleaf burn-off and extended control on key grassy and broadleaf weeds like wild oats, bromes, and kochia in lentils, wheat, and more. See your local retailer or visit ag.fmc.com/ca today.
It's time for RealAg Radio on Rural Radio Channel 147 on Sirius XM. RealAg Radio and RealAgriculture.com is your home for insight and analysis of the issues that are impacting your farm business. Let's get real and get connected with RealAg Radio.
Yes, it is time for RealAg Radio here on Rural Radio, Channel 147, Sirius XM. I am your host for the day, Lyndsey Smith, and we've got a whopper of a show lined up for you here. So thank you for joining me here on this Wednesday, March 5th. All right, there has been so much happening, of course, on the tariff front. We will dig into that. I will, of course, though, I'm going to timestamp this. I know you're listening to it at 4:30 Eastern. However, we often have to record portions or all of the show well ahead of airtime. Every once in a while, we do it live. But I did want to make a note that, of course, this tariff situation is rapidly evolving. And frankly, sometimes we just have to submit the show before all the news is out. So as of recording, everything is as we present it as far as tariffs go. So that is one thing we are going to do. So Kelvin Heppner and I, we're going to talk about what happened Monday night as far as the U.S. tariffs being put in place and what Canada's response has been so far and what it might look like in the weeks ahead. So as of speaking, those tariffs are still on at the 25% from the U.S. on any Canadian, Mexican, or Chinese goods coming in. There are different rates between those, of course. Canadian energy is only at 10%, everything else at 25%. Canada, of course, a month ago had released its counter tariff or retaliatory tariff list. And then there is another list that is being put together that essentially there's a 21-day discussion and comment period on that one. So there are a lot of moving parts here, and honestly, so much of it focuses on agricultural trade that Kelvin, hats off to him, has been going a little cross-eyed trying to make sense of all these line items. So he's going to join me after the break. We're going to break down Canada's response so far. Then we've also got Dave Gallant will join me later in the show. He'll join Sean Haney later in the show for a product spotlight. So stick around for that. And Lance Zimmerman and I have a fantastic conversation on the beef markets and, of course, what it takes to expand a cow herd, when prices are so darn good. So stick around for that as well. And then to round out the show, Sean Haney, your regular host, will be back. He had a brilliant conversation with David Coletto about what's going on with the polling as far as our federal candidates, our federal parties' popularity, and let's face it, it looked like a conservative slam dunk coming up. Is that in question? Whew, stick around for the end of the show. And as always, if you've got feedback on today's show, 1-855-776-6147. You can leave us a message there. You can, of course, send Sean an email, shaney@realagriculture.com, or myself, lsmith@realagriculture.com. Or, of course, find us across social media. And hey, this is your reminder. Head on over to realagriculture.com/radio. You can download this episode, share it with your friends, and past episodes as well. So go check that out. All right, let's take a break, and I'll be back with more RealAg Radio right after this. I'm Lyndsey Smith. Joining me now is Chris Kennard for Farmer's Edge.
Our focus is all about supporting ag retailers and those that serve farmers directly. We aim to be an enabler both from the tech perspective and the lab perspective. And really the one big change there is the expansion of our soil lab services, really opening the door to ag retailers, independent agronomists, making it easier for them to access fast, reliable soil testing. The labs work extremely efficient. What we feel sets us apart is also our integrations. We've we've built API connections with existing software that retailers and independent agronomy companies use to bring the results easier back into their own systems. We want to help retailers grow their business, and in today's market, turnaround times are extremely important. So we want to make sure that it's top of mind when thinking about Farmers Edge as a lab. Our website is www.farmersedgelabs.com. There is a link to both the Canadian site and then the US site.
Through a growing storm of kochia, cleavers, chickweed, and more, there's a clear path. Introducing Oxbow, a versatile cereal broadleaf herbicide that gets the job done. Powered by Duplisan technology, Oxbow is your workhorse on resistant kochia and other tough weeds. With flexibility in timing, rates, and recropping options, your path is clear. Find your way on the path of least resistance at newfarm.ca/Oxbow.
Welcome back to RealAg Radio here on Rural Radio, Channel 147, Sirius XM. A reminder, fill up with your local co-op this seeding season. With full tanks, you can avoid the rush and start your fieldwork at the earliest moment possible. Plus, with the Spring Early Delivery Program, you can save time and free up cash flow. Receive early on-farm delivery of high-quality fuels and delay billing at participating co-ops. Talk to your local co-op fuel team member today to arrange for early on-farm delivery and ensure you are fueled up for seeding. Well, it is an interesting week, to say the least. And to break down all that is happening, at least as of today, Wednesday, March 5th, between Canada and the U.S., our tariffs, our counter-tariffs, all sorts of nonsense. We've brought in Kelvin Heppner with RealAgriculture.com. Kelvin, catch us up. This is Wednesday. We are, I guess, just over 36 hours into this trade war. So far, what has been Canada's response?
Well, Canada had a list of $30 billion worth of tariffs, things applied at a 25% rate. That list was published back in early February before that initial February 4th deadline or February 3rd deadline. And so that list took effect. Those tariffs, Canada's retaliatory tariffs on $30 billion worth of imports from the U.S. took effect yesterday at 12:01, the same time the U.S. 25% tariffs across the board took effect, with, of course, the 10% carve-out for Canadian energy products. So that list is in effect. It has some agricultural products, but nothing, I would say, that has major consequences for agricultural supply chains or farm expenses. Tires is a big one on that list. There are some commodities, cereal crops coming into Canada, but of course, there isn't a lot of cereal grains from the U.S. that flows north normally or historically. So there are some there, but Canada yesterday released a list of $125 billion, so a much bigger list that is now open to a 21-day comment period. And this one includes some big ones for agriculture. This would take effect in 21 days unless there are some changes to the tariffs on the U.S. side. And so this one includes fertilizer products coming from the U.S., ethanol. Canada is by far the largest customer and a fast-growing customer of U.S. ethanol. I believe we're on track to potentially import, is it 1 billion gallons of ethanol, which is something like 350 million bushels of U.S. corn. That market could be facing tariffs into Canada in kind of a 3-week time frame right now. Biodiesel, beef, pork, cattle. That's a big one with our integrated supply chain across the North American cattle industry. Pigs, corn, soybeans, canola meal, soy meal for livestock feed north of the border. All kinds of agricultural machinery are on this list. Forage crops. So it's a long list of things that would be quite disruptive to our agriculture industry if Canada is forced to implement these countermeasures. So in total, there's something like 1,200 categories of import products that are currently facing tariffs into Canada. If Canada is forced to come at the U.S. with this second wave, it would add another 4,500 roughly different products that would face tariffs coming into Canada. And so our brains are a little tired here as we've been combing through all these different categories here the last day, trying to figure out what could face tariffs and when. And of course, it's a moving target, as we've heard from Commerce Secretary Howard Lutnick here this morning again and yesterday, saying that there could potentially be an announcement this afternoon of President Trump signaling softening or some sort of compromise, some pulling back on the U.S. tariffs on Canada. And so it's chaos all around in the trade world right now.
So when I think that's an understatement. Obviously, we've also seen the stock market has actually pulled back now, second day in a row. Again, we're recording the morning of Wednesday, so who knows what will happen this afternoon. That seems to be the new normal. And I want to make it very clear that Canada's retaliatory tariffs are retaliatory. They are only being put in place because the Trump administration has moved forward with its 25% tariffs, as you said, across the board.
And 25% tariffs across the board on Canadian exports, it's worth way more than what Canada is able to retaliate, or what is proposed to retaliate here with this total of $155 billion worth of retaliation.
Right. So that is very clear. What I have found interesting in the last little while, because I think, we've had this conversation on this show for weeks now about, this threat of tariffs in some ways is almost worse because it creates the uncertainty, it creates job loss, it creates, a lack of confidence in making the right move, of making investments, et cetera. So with some surety, we see, of course, all right, with tariffs in place, what I'm trying to find silver linings here, Kelvin. There aren't many, but I am thankful that we're starting to see U.S. groups speak up publicly to say, look, this is not good for our industry in America. So what did we see yesterday from at least some groups?
Yeah, we saw the American Soybean Association come out strongly against this. Of course, President Trump had posted on Truth Social about American farmers benefiting from tariffs, and he said, have fun to end his post. And American Soybean Association came out saying this isn't fun. Farmers aren't having fun with this. We've seen the fertilizer industry, of course, the Fertilizer Institute and other groups, retailers as well, come out raising major concerns about tariffs on potash and other fertilizer products coming out of Canada. And so American Farm Bureau has had some comments against raising concern about the tariffs. So yeah, it is. It's been slower than of course what Canadian trade partners and companies, businesses would like to see from our American business partners, but yeah, we're starting to see some pushback against these tariffs and concerns being raised about them. I'm not sure on the certainty front, though, Lyndsey. I was kind of the same thought where I thought, let's just get this over with. Let's put the tariffs in place so that everybody feels the pain and businesses have that certainty in terms of making decisions. I'm not sure we have any more certainty today than before the tariffs took effect, just because there's still this potential of higher tariffs. There's this April 2nd deadline coming up. There's reciprocal tariffs. There's tariffs on steel and aluminum. There's sector-specific stuff. There's just so much talk of tariffs and potential for more tariffs that I'm not sure that we're in any more of a clear picture moving forward in terms of making investment decisions or forming business relationships, maintaining business relationships in today's environment than we were before the tariffs took effect.
Well, and if we can for a moment, also we are trying to navigate the information side of this. So I've been getting, of course, asks from farmers to say, what do we know? What do we not know? We're trying as hard as we can. As you said, your brain is maybe a little mush trying to navigate all this. There's what's on paper, and then there's, of course, what's discussed. I think there's still a lot of misinformation, disinformation circulating, both of which are difficult to navigate. And then there is you're right, we don't necessarily know on the product front what's already, so we are here early March, right? It won't be long before we're trying to put a crop in the ground, and there isn't necessarily all the product where it needs to be on both sides of the border, right? I mean, we know we've heard from producers in the States who are potentially bringing in fertilizer from Canada that weren't sure what to do with it, or if it would be here already. We've got, I'm hearing from farmers here in Ontario who aren't sure about whether it's parts or equipment or seed that's in place yet. Like there is still so much uncertainty, and we don't necessarily have clear answers on not just, if the tariffs are in place or not, but what things are going to cost or if we can even get them. And so I have to step back a minute and think, all of this for what? And that, I think, is the billion-dollar question, is what is this all for? And we are still seeing that it is predicated on fentanyl crossing the border. Canada has done at least some things, I think, that were supposed to be factored in. But as of right now, we're still hearing that apparently either that wasn't enough or it's being ignored. So do we have any indication as to when Canada and the U.S. may even talk about this and sit down and hash this out?
There are some conversations happening. Like we know that Howard Lutnick talked with Doug Ford yesterday. They had a 12-minute phone call apparently that both sides, it seems, leaked their perspectives on it, and it seemed like it was somewhat productive. So the Premier of Ontario, of course, has had a major presence in U.S. media fighting this and standing up for Canada. And so, I'm not sure on the Prime Minister's side of things whether there's clear indication whether the Prime Minister has spoken to President Trump. I haven't seen any reporting that that has happened. The Trump administration has been quite difficult to get a hold of, and they have not been giving the Canadian government time of day to talk in a lot of cases. There have been some connections between cabinet ministers and secretaries, but in some cases, we know on the agriculture file, for example, Brooke Rollins has not arranged a time, or we believe that she has not even spoken with Canada's agriculture minister, who now announced on the weekend that he's retiring. So there is that factor also where we have this kind of lame duck government here in Canada. They're going through a leadership selection process, and Parliament isn't sitting, and so there isn't a clear mandate, and it's hurting Canada in terms of being in limbo during this very difficult time in terms of dealing with the U.S. as well. I don't know. Yeah, it's difficult to say when we're going to see resolution on this, other than if President Trump decides that, this isn't actually working, and he's hearing backlash again from the stock market declines, from consumers concerned about rising prices, as of course this is inflationary. And so it surprised me that the Trump administration hasn't focused more on talking about tax cuts and reducing costs for Americans. They've talked about it on eggs, but failed miserably in terms of reducing prices there so far. But elsewhere, I thought they would lead with that before being so tough on tariffs, because tariffs, they need to offset the increased costs that tariffs are going to put on American customers.
Mm-hmm. So, and that I think is part of what we're trying to navigate in thinking about, what is the off-ramp? And this is one of the challenges I think we have with, a president like the U.S. has. He doesn't give himself necessarily an easy way to dial anything back, because he's so committed to a certain line that to find an off-ramp, I think, is going to be very difficult. And that is, I think, what I'm concerned about, is that even as we navigate this, and, if Republicans, the states that are if agriculture stand up and say, this isn't working, we need to do something else, I don't know what the off-ramp is. And so we sort of all cross our fingers and hope that they find one. But I'm just not sure that what this mess that's been created, I don't think is easily unmessed.
He has a pattern of coming out with strong bluster, strong position, extreme position, and then pulling back and calling it a win kind of thing. That is a Trump pattern that everybody, I think, is well aware of. But here he had to go through with these tariffs. I know there were even lots of people in agriculture, both sides of the border, that didn't believe as of a couple days ago that Trump would actually go ahead with these tariffs. So here we are. They are in effect. He kind of had to, because he kicked the can down the road so many times, in my opinion. He had to actually follow through. Otherwise, the threat would become meaningless if he just kept pushing a threat and not actually following through on it. Now, though, like we talked about earlier, the rubber is going to hit the road for American customers with increased costs, and that's, I think, the off-ramp is if costs get too high. It's a mix, though, of thinking here. Fentanyl is being used as a legal excuse, and sure, Canada has taken measures to tighten up what very little fentanyl was crossing the border, and migrants as well. But in the bigger picture, you got people like Robert Lighthizer and the big thinkers around Trump that want to bring jobs back to America, no matter what it costs, no matter if other countries have a comparative advantage in producing something. That will raise costs overall and isolate the U.S. in the long run. But there is a lot of that thinking around Trump right now. And unless there's backlash from consumers in the market, they're going to keep pushing tariffs as a means of bringing those manufacturing jobs back to America.
Mm-hmm. And this is the part that I think so many of us sort of stumble on is if you subscribe to that way of thinking, that realistically bringing that manufacturing back and those manufacturing jobs in America are worth all sorts of pain in other aspects. And so, as opposed to saying, we're going to prioritize bringing manufacturing to America, but here's the long-term way we're going to do it that's going to minimize that impact. The thinking is like, no, it's going to hurt, but eventually it'll be better. And I suppose we have to then be ready for what amount of hurt Americans are willing to take for the long-term gain. And politics usually isn't about long-term. So we'll see how that goes. Okay, exactly. Kelvin. Yeah. Well, we'll leave it there for now. We will, of course, be back on Friday's show for the issues panel. We'll have plenty of things to unpack, and who knows, maybe we'll have a completely other tariff scheme to discuss on Friday.
There's a good chance.
There's a good chance. Okay, all right. We'll be back with more RealAg Radio right after this.
FP Genetics brings new seed genetics to Canadian farms, empowering growers to thrive in ever-changing conditions. We are committed to helping farmers thrive with superior genetics, developing customer strategies to build best practices, all tailored to individual needs. Visit fpgenetics.ca to discover FP's dynamic portfolio of wheat, durum, barley, oats, peas, and rye, and to contact your local territory manager. FP Genetics. Gain a genetic advantage. Experience the next wave.
Farm smarter with SGS. Our expert seed testing ensures your crops start strong and thrive. From germination to vigor to disease testing, SGS delivers results you can trust. Plus, we've added new wheat midge refuge varieties perfect for seed growers. Need precision? Explore our seed testing packages with built-in savings. Call us today at 1-800-952-5407 or visit cropscience.sgs.ca. SGS, when you need to be sure.
If you're applying a low-rate N stabilizer, you might be falling for a losing strategy. Low-rate products promise great results, but may lack the potency of higher active ingredient concentrations, so great isn't always what you get. Don't put yield at risk. Put your trust in proven solutions. Anval Nitrogen Stabilizer, Super U Premium Fertilizer, and Tribune Nitrogen Stabilizer from Koch Agronomic Services. These products offer higher active ingredient concentrations imitator brands can't match. See the difference at defendyourn.ca.
And welcome back to RealAg Radio. It's now time for a product spotlight, and today we are joined by Dave Gallant. He is Vice President of Finance and the APP Operations from the Canadian Canola Growers Association, based out of Winnipeg. Dave, how are we doing?
I'm good. Yourself, Sean?
I'm doing really good. So, Dave, I guess to start off, for anyone unfamiliar with the cash advance from CCGA, can you tell us about the program and how it works for farmers?
It's a great program for farmers. It allows farmers to get access to cash flow for their inventory without having to sell that inventory. And even better is that for grain and oilseeds farmers, they can get in cash flow for their inventory before they even seed. So right now we're taking applications for the 2025 program from farmers based on what they plan to seed this spring. They can also wait until they finish seeding to apply for their advance, or they can wait until they've actually got crop in the bin. And for our livestock producers, as long as hooves are on the ground, they can start applying for their 2025 advance today.
Well, and I think it's an important component too. This is available to livestock producers too.
That is correct. So we do 55 different products, including cattle, bison, sheep, goats, and hogs.
Now, below prime is an attractive interest rate these days. We have seen the Bank of Canada lowering rates, but still below prime is awesome. The two parts of a cash advance, interest-free and interest-bearing. Can farmers use both, and how do they work together?
They can definitely use both. So the first $100,000 the farmer applies for the 2025 program is interest-free. So there is no cost from an interest perspective on the first $100,000. The remaining $900,000 that farmers are eligible to receive are at prime minus a quarter. So prime today is 5.2%. That means the remaining $900,000 is at 4.95%. And to make it concrete for everybody, a farmer applying for a $500,000 advance, first $100,000 interest free, the remaining four at 4.95%, has a blended rate of 3.95%, or a full 1.25% below prime. So it can save quite literally thousands to tens of thousands of dollars, depending on what their borrowing rate is for their working capital from their bank or their credit union.
Now, this isn't the only thing that the Canadian Canola Growers Association does. Tell us a bit more about the organization and some of its objectives.
So CCGA has been around for 40 years. This is our 40th anniversary. We are definitely a large cash advance administrator, largest in the country, but we also represent canola farmers nationally on a broad range of issues. So we advocate on their behalf on things like transportation, trade, and business risk management. So we are representing farmers not only on the cash advance side, but also on a broad range of issues that affect their operations on a day-to-day basis.
Now, for people that
aren't necessarily familiar with cash advance or maybe haven't been using it, and then they did in the past, there is opportunities here. What are some ways that farmers can use their advances during the growing season?
Well, one of the beauties of this program, Sean, is that you can use the money for anything. There are no restrictions on how the funds are being used by the farmer to make their farm successful. So what we see in the spring is that most of our grain and oilseeds producers are using it to help put the crop in the ground. So it's to buy seed, fertilizer, pay the cost of wages, pay fuel costs, whatever is needed to cover the cost of getting that crop in the ground. Our livestock producers are paying for caring for those animals and raising those animals until they sell them. So that's the primary use at this time of the year. But as we get further into the season, what a lot of farmers are doing is they're using that cash flow for their inventory without having to sell it, so they can actually formulate their marketing plan and maximize revenues later in the year by selling when prices make more sense for their farms.
So how do I get started if I'm interested?
Well, if you're an existing customer, you already have access to our secure portal. You can start anytime you want, 24 hours a day, 7 days a week. If you're new to the program or new to CCGA, simply call our 1-800 number, 1-866-745-2256, and our dedicated contact center staff will walk you through the process, complete the application for you online, email it to you with a complete list of what needs to be done, and once you get all that information back to us, your advance is ready to be queued up and issued on April the 1st.
Now, I was just going to ask you about this. You actually help with the application to make it easier for farmers?
We do whatever we can to help our farmers. So if you're going to do it over the phone, we'll complete the application on the phone and email it to you. Our secure site is designed so that farmer Sean logs in. We already know who you are, what you grow. You simply fill out a few pieces of information and hit submit. So we make it as easy as possible for farmers to apply for their cash advance.
Oh, anything else you want to help me out with? Like maybe you want to put a shift in the combine, help me with my taxes, anything else there, Dave, while you're being so helpful?
Well, we do our best, and just to give you some perspective, we put $2.5 billion in the Western economy from cash flow this year. So as much as I'd like to help with other things, I'll stick to what I know best, and that's getting money in farmers' pockets as quickly as possible.
Great stuff. Hey, we've been talking to Dave Gallant from the CCGA with the Cash Advance program. Dave, thanks a lot for joining us here for this product spotlight.
Thanks for having me, Sean.
Hey, we'll be right back on RealAg Radio, Rural Radio 147, right after this. Looking for proven performance in wheat? Lima Grain Cereal Seeds has you covered. With locally adapted varieties bred across key growing regions, LCS delivers top-tier genetics for winter and spring wheat. In 2024, LCS farmers swept 12 national wheat yield contest categories and won the Bin Buster Award for the 4th straight year. Learn more by going to limagraincerealseeds.com.
If you grow soy or edible beans in Ontario, you know that Sclerotinia white mold is no joke. Yield loss can be devastating, and timing fungicides can be complicated, but did you know there's a new seed treatment that can help mitigate yield loss? Start the year off with your best foot forward against disease. Ask your seed supplier or local Agrimart group to pre-treat your beans with Heads Up. Part of a complete white mold management plan, ask your seed dealer about Heads Up today or visit headsupst.com.
Welcome back to RealAg Radio here on Rural Radio, Channel 147, Sirius XM. I am your host for the day, Lyndsey Smith. It is Wednesday, March 5th, and this segment is brought to you by Koch Agronomic Services. Don't put your yield at risk, put your trust in proven solutions. Anval Nitrogen Stabilizer, Super U Premium Fertilizer, and Tribune Nitrogen Stabilizer from Koch Agronomic Services. These products offer higher active ingredient concentrations imitator brands can't match. See the difference at defendyourn.ca. I am Lyndsey Smith with RealAgriculture and RealAg Radio, and joining me now is Lance Zimmerman. He's a senior beef analyst, animal protein, of course, with Rabobank. Lance, how are you doing?
I'm doing great this morning. Thanks for having me on.
All right, Lance. We saw each other just about a month ago at NCBA down in San Antonio, and things have changed in the last month on beef prices. But not necessarily to the surprise. But let's start there. What has the market sort of been doing in this past month?
Yeah, I mean, I think honestly, the market's been trying to catch its breath. It kind of ran itself to exhaustion to the high side in those first kind of 4 to 5 weeks to start the year with all new record highs each and every week. And now we've kind of been on the downhill slide each and every week, almost in equal measure and magnitude here over the last several weeks through February. And so it does look like the market is settling in to probably what's going to be our trading range again, as we probably try to establish a short-term low in this market and start working our way seasonally higher as we're accustomed to. Current guesstimates out there, both from Rabobank and others, is that we'll probably try to retest those January highs as we work through the spring. We all know the cattle supply is going to be tightening relative to that front end fed cattle supply. And I think the biggest thing is just navigating demand. That was an awfully strong cutout push that helped us lead that cutout higher in January. It was all on the backs of chuck and round cuts and then trimmings. And it's kind of an odd period to have put in that strong of a wholesale market, because typically demand wanes as we get into January, February. Our better demand periods are usually ahead of us. We'll see how this goes as we get into the warmer weather months and the consumer navigates all of this chaos and uncertainty that's around them, see if they can still navigate towards higher and stronger demand in the spring, even with some of the headlines that keep bombarding them.
Mm-hmm. Now, we've got a report, and we can link to it as well, that Rabobank has put out on strategies to shape a stronger U.S. beef industry amid higher prices. And as you mentioned, sure, there's been a bit of a pullback, but we are still in a time of very strong prices, tight supplies, strong demand. One of the questions that had been discussed while we were at NCBA was this discussion of, a rebuilding of the cow herd. Do you see that is actually going to happen? Do we need to rebuild the cow herd, or can we maintain where it is with such tight supplies?
Yeah, no, I think it's a fantastic question. And yeah, the paper basically alludes to not just the short-term reality of higher prices, but actually, more importantly, the longer-term reality that over the next several years, we're going to maintain these higher price levels, even if demand doesn't increase one bit from now through the next several years. And the paper really focuses on talking about that cyclically, we'd expect highs probably around 2027. You could even make the case that maybe it stretches all the way into 2028. And so for the next several years, just on declining supplies, we can navigate a market that has higher highs and higher lows each of the next several years. You still have the seasonal ebbs and flows. You certainly are still going to have volatility, and we can talk a little bit more about that in this discussion later. But I think the important thing is, as this industry looks ahead, we've already entered into a phase where cow culling is declining precipitously. It did significantly a year ago, almost 1 million head decline in cow and bull slaughter across beef and dairy. We're probably going to see another 500,000 to 700,000 head decline in that category again this year, speaking to the U.S. market. And the idea there is, Lyndsey, I think that the cow herd's at a place, it doesn't have to get any lower. It's built for a worst case scenario. What I mean by that is a worst case scenario in terms of pasture and forage availability. It's very comfortable where it's at, plus or minus 28 million head. As we go forward, though, I think we're starting to see some stress fractures show up in that breeding herd. In other words, it's starting to get some age to it. And I think producers have largely culled away all the outlier cattle, the underperforming and ornery ones that they've always had a first cull opportunity on their back, probably in most operations. Now, any cuts that happen to the cow herd are going to hurt more because they're cattle that are productive. They're cattle that are valuable to the operation, but they're also getting older. And so I think as we look at it, you could see it in the reflection of the January 1 heifers on feed number. That percentage was as low as it had been since any point going back the last 5 years. You're starting to see a 1 to 2 percentage point decline in the percentage of heifers being sold as feeder cattle and calves right now across the U.S. All of that points to we're starting to get back to a place of rebuilding. I call 2024 a herd stabilization year, even though it was down 200,000 head. We need to understand that those surveys have such an error around the numbers that anything plus or minus 500,000 head is practically steady.
Right.
And so 24 was largely a stabilization year in my mind. I think 2025 will be the same way, where maybe our January 1, 2025 number was down 200,000 beef cows. Maybe 2026 on January 1 is up 200,000. But for all intents and purposes, no different than the last couple years. And that would mean that our best opportunity for rebuilding is probably looking out to through 2026 and into 27, and then the next several years after that. Profitability says it should happen. The cow-calf producer is unquestionably profitable right now. The other shoe that needs to drop is, will weather patterns allow us to?
Right. And as you said, I mean, worst case scenario sort of on the grass side, the grass availability. We have to match our animals to what we have to actually pasture them on. And so if we've got better grass production this year, that certainly supports keeping some of those heifers back, keeping those cows around. So you did mention volatility. I'll get to that in a moment. But one question that certainly has come up is, of course, the dairy industry is a key player in beef supplies as well. Certainly there has been discussion about how that continues going forward, with a couple dynamics happening in the dairy industry. Is that seen as a growth potential for supply, or do we see that pulling back as well?
I think it's going to pull back. As we look at it, we've talked a lot. In fact, beef on dairy mixes have absorbed a lot of oxygen in a lot of rooms and a lot of beef industry discussions. And I would argue to some extent they probably commanded too much oxygen in the room, because what we forget is, at least speaking again on the U.S. side, I can't speak to the Canadian dairy cow herd, but on the U.S. side, that cow herd number has been very flat for decades, usually between 9 million and 9.5 million dairy cows. It's not changed. Where the beef cow number has declined over time with its cyclical peaks and valleys, the dairy cow number has had some ups and downs, but it's stayed much flatter, relatively speaking. And as we look at beef on dairy, it's changing the genetic makeup of the offspring out of that herd, but it's not changing our underlying numbers significantly. There's been some changes around the margins, but in general, you always needed one pregnancy out of one dairy cow to keep milking her. And that hasn't changed with beef on dairy. But what has changed is some rounding error around a number of different dynamics that largely have probably peaked as we look at where we are going into 2025. And what I mean by that is, as we've transitioned more of these larger commercial dairies to a higher percentage of beef on dairy offspring, what we've done is we've gained a little bit of conception rate. And that little gain in conception rate obviously adds, a few thousand head here and there across a whole, an entire nation's dairy cow herd. One of the other things that we've done is all of a sudden we've increased the value of these animals. It's also increased our management of those animals. We've been much more intentional when initially that day-old calf has an extra $200 or $300 a head attached to him or her. Everybody's going to be a lot more focused on management of that animal. And so the viability of that animal's improved. I mentioned the conception rate earlier. The morbidity rates in these animals have dropped. The other thing that's come along the lines is we've increased the turnover rate. In other words, we're able to eliminate days on feed on these animals because they do perform a little bit better. And so again, you've increased the turnover rate. And by doing so, you increase some volume in terms of head throughput all the way through the system. And then the one thing that we haven't talked about that probably is meriting discussion is we've eliminated a lot of cattle from veal production. And so we've diverted hundreds of thousands of dairy calves out of veal production and into fed beef production. So that certainly has an uplifting factor. And then lastly, as we fine-tune these systems, these dairies have gotten much better at narrowing down the number of dairy replacement heifers they produce. And that's allowed more of those other cattle to enter into the beef chain. That's important in this discussion because right now the dairy industry is probably in more serious, dire straits relative to rebuilding their herd than the beef industry is. They have a very well-oiled machine that was very used to a very consistent turnover rate in terms of how many heifers they needed. As these commercial operations narrowed down that pool of replacement heifer candidates and only bred their first and second calf heifers to sexed Holstein semen to produce replacement heifers, they didn't provide any additional replacement heifers in the secondary market. And a lot of the mid-sized to smaller dairies depended on that commercially available supply of replacement heifers to fill their dairy needs for replacements. And so today in the U.S., you're seeing dairy heifer prices on top of $4,000 a head in many places. And they need more heifers because that dairy cow herd coincidentally has gotten older and they've carried more cows into a fifth and sixth lactation. Some of those cows have been more susceptible to high path as well. And so we're in a situation where I think you're going to see more of these commercial dairies scale back a little bit on the beef on dairy, lean more into developing a few more replacement heifers going forward. But that's going to take time too, because just like the beef side, it takes years to move that genetic interval and to move those populations. So for now, I think the estimates are we have about 3.5 million beef on dairy cattle in the supply chain, and we'll probably stay between 3 and 3.5 million for the next several years.
Okay. Now, finally then, let's talk that volatility. Some things are perhaps easier to try and work into a market plan or looking forward. Other things more difficult. Global shifts in trade definitely play in here. So how then, are you looking forward in the marketing side on the trade issues and challenges ahead? How do you work that volatility into an outlook?
Yeah, one of the things we talk about in the paper is that we're sitting here today with the value of a fed animal at about $2,800 a head. For nice round numbers, let's just call it $3,000 a head. When that animal is worth that much, and that's talking relative to the feed yard, but the same type of math kind of works as we think about feeder animals, calves at the ranch. All of those animals are worth more than they ever have been before. And that animal that's worth $2,800 to $3,000 a head in the feed yard today as a finished animal, just 5 years ago, pre-COVID, was about $1,600 a head. And so not quite a doubling. In fact, it's about 67%, if I remember the math correct. Everybody's dealing with that, whether it's the cow-calf producer, the backgrounder, grazer, or the finisher yard. And so as we navigate that, everybody's got to be a little bit better about assessing risk management. And all of our minds, especially me being a market analyst, gravitates towards futures and options and other contract options or insurance options or long-term forward contracts when we think about risk management. But what I challenge folks to do is expand their mind, expand their thoughts around what risk management all entails. And we break out risk management into 4 key areas, and we list some things underneath each of them. The 4 key areas are production risk, market and financial risk combined in one, environmental risk, and then also institutional risk. And so I think we understand production risk and environmental risk pretty well. And so I won't harp on those too much, but you brought to light, trade and regulation. That is that institutional risk that we talk about so often. And we're certainly operating in an environment today where it's elevated. Every single day brings a new challenge, a new headline to have to wrestle with. And I think the biggest thing, whether it's any one of those 4 categories that I can encourage your listeners to do, is just evaluate all the different aspects of risk that exist in their day-to-day operations. One of them that's near and dear to my heart right now is that idea of what's our generational risk on these operations. We have a lot of producers who are older. We have a lot of younger producers that are interested in taking the reins. What are we doing to ensure that as we transfer this operation, in many cases multi-million-dollar operation, to the next generation, that we're doing so in a way that it's a blessing and not a curse? And what are we doing to make sure that we're future-proofing these operations as we think about them? We often talk about the risk of death or the risk of illness to a family member, but do we also talk about the risk of divorce and some of these other uncomfortable topics? I think just making sure we're fully assessed on what those risks are day to day and making sure our operations can be resilient in spite of that volatility.
All right, we're going to leave it there for now. We're going to take a quick break, and I'll be back with more of RealAg Radio right after this.
Co-op knows your community because we live here too. Our teams are your trusted partners with a range of expertise to help support your entire farm operation. And we're giving back. In the past 5 years, Co-op has invested over $1.1 billion in the prairies through building, upgrading, and expanding local facilities. And we've returned over $1.17 billion to Co-op members in the prairies. Co-op, we're all building something for the future. Here for your farm, here for your family. Learn more at coop.crs/farm.
Every farmer defines success differently, and every farm has its own unique challenges. Corteva Biologicals is partnering with Canadian farmers for their success, offering unique solutions that improve and protect crops from start to finish, based on each field's needs. Using proven, predictable solutions across all crop stages, Corteva Biologicals helps build healthy, productive, and profitable farms. Corteva Biologicals, we're growing together. And welcome back to RealAg Radio here on Rural Radio 147, Sirius XM. Hey, fill up your at your local co-op this seeding season. With full tanks, you can avoid the rush and start your field work at the earliest moment possible. Plus, with the Spring Early Delivery Program, you can save time and free up cash flow. Make sure you go to your local co-op. Okay, let's talk about Canadian politics and what exactly is happening in Canada regarding to how Canadians feel about some of our political leaders relative to what's happening in kind of the trade tiff battle, war, however you want to put it, with the United States. Joining us right now is the CEO of Abacus Data. It is David Coletto. David, great to chat with you.
Chat with you, Sean. Thanks for having me.
Okay, so what has shifted here? I guess, where are your numbers right now? What is the gap, or is there a gap between the Conservatives and the Liberals?
So we still see a gap. Our last numbers have the Conservatives ahead by 12 points, which is by most pollsters' counts, still more favorable to the Conservatives than some other polls. Others we've seen like the Liberals ahead by 1 or within 3 or 4 points. But that doesn't change the fact that we've seen a big shift. The Liberals are up 9 points. They're at 29% nationally in the course of basically a month and a half. The Conservatives are down 5 or 6. The NDP is sinking rapidly. They're at the lowest level we have tracked their support at 14%. Since October of 2016, right? So a whole bunch of things have changed in the course of 2 months where, the day that Justin Trudeau announced he was resigning, only about 12% of Canadians thought the Liberals deserved to be reelected. His negatives were as high as they've ever been. The country was just in a deep, deep funk. Fast forward to today, and the country's still in a deep, deep funk, but it's being driven less by what people think Trudeau and his government has done. And now the new villain in our story is Donald Trump and the threat that he's posed, not just with the tariffs, but just the constant musing about annexing us and making us the 51st state.
So what about Trump has pushed some Canadians towards the Liberals over the Conservatives? What are they seeing as the difference there?
Well, I think what's changed is the question a lot of voters are asking now, right? Maybe a simple way of framing it is like, what's the job we're hiring for? So before the new year, really, the job that most Canadians were hiring for was somebody who could come in and put the fire out, who could make their life more affordable, who could build more homes, who could just change direction, because people had really felt that after 10 years of a Liberal government, it was time for a change. And Pierre Poilievre was overwhelmingly the choice that people who wanted that job to be filled were thinking of. Today, the job that I think more and more people are actually thinking needs to be filled is who can help navigate, if Canada's a ship, right? Who can navigate this ship through probably the worst storm we've seen in most of our lifetimes. And that means the kinds of qualities, the experience, even the approach might be different. And so the result is, again, I still think the Conservatives are the favorites to win. I still think they're in a stronger position. But, if Mark Carney becomes prime minister, which I think he will be next week, he is opening people's minds to the idea of voting Liberal that Justin Trudeau absolutely wouldn't have, that Chrystia Freeland is not. And that's, in a way, creating a lot of uncertainty and volatility around what that next election outcome might be.
Are there certain demos of Canadians that are more inclined to be pushed in that direction?
Yeah, really fascinating is baby boomers, right? A demographic that was the least friendly to the Liberals over the last 10 years is now increasingly the one that I think might save them, frankly. And that's, I think, happening for two reasons. One is we know from our research that boomers are the demographic still most likely, Sean, to be listening to your radio show, to be watching the news on TV, and they have been consuming this constant stream of Trump news that has made them most likely to say that Trump is the top issue in the country. But at the same time, as a result of that, they've also become the most angry about all of this. They are the ones who most likely say they feel betrayed. They're the most likely to say, I'm going to boycott everything about the United States. They're probably the ones putting up Canadian flags outside their homes, in which they wouldn't have done that except for on Canada Day. And the result is that they are now much more open to voting Liberal. And I think they understand that Mark Carney is likely going to be the next leader. And even though Mark Carney's not a baby boomer, he's slightly younger, he's the most baby boomer of probably the leaders, right?
Yeah.
And so, yeah, boomers are like the one is the demo to watch right now. And they're the ones I think who have moved the most in the period that we're talking about.
Now, is that boomers across the country, like even Alberta and Saskatchewan?
Well, everything's relative, right? Like Alberta and Saskatchewan will always have a much lower level of support for Liberals, no matter what. Even when the party's winning big majorities, they still, will pick up only a handful of seats in Alberta and maybe none or one in Saskatchewan. But yeah, I think it's all relative. So it's kind of like rising everywhere. But what's actually interesting about Mark Carney and boomers is he's really appealing to people in Quebec. And as a Anglophone potential leader of the Liberal Party, that is something we didn't expect, because there's been some questions around his French, and the evidence so far is he's appealing to Quebecers and older Quebecers, and potentially making it hard for the Bloc Québécois even in that province to hold the support that they have.
I was just going to say that looking at some of your data provincially over the past year, that's Quebec is the province where Pierre has struggled the most, right? And so he's the one with more of the French name. He is the one that speaks very fluent French. This is a very it's like kind of a twist that makes it so interesting.
It does. And like even Leger, another polling company, showed that like in the days after the first tariff threats from Trump, that support for Quebec separation dropped 10 points in literally a week, right? As a signal that like even the most nationalist and separatist of Quebecers are saying, well, hold on a second, maybe at this moment, going it alone is not going to make much sense when we're up against this guy, down south. So yeah, Pierre has always had a tough time breaking through in Quebec. I think it's a historical legacy of Conservatives always struggling in that province. But I think also a little bit of reaction to some of his policies. Yeah. Frankly, like Quebecers are the most likely to care about climate change and think about sustainability and those issues at the top of kind of their list. And they're the least likely to think that Poilievre cares much about it, where that issue is not as prominent elsewhere.
I've had a number of people in the audience, provide feedback or suggestion in even some of my, presentations as of late that, I don't believe it. It's a honeymoon period. It's happened too fast. And the speed at which it has happened has people kind of doubtful. From your experience, is there any validity to that?
I think historically there is some validity to that, right? If you go back to, I was very, very young when Kim Campbell became Liberal, Conservative leader and Prime Minister, she was ahead in the polls early on, and then the result was 2 seats for the Conservatives and a complete destruction of that party. John Turner, back when I was 3 years old in 1984, became Prime Minister after Pierre Trudeau, and the polls said, rebound for the Liberals. And then, Mulroney won a big majority a few months later. So those are the historical examples we have. Where I'm not certain that we should believe entirely that this is a blip, and that's a blip that's going to, or a bounce that's going to revert, is that the context is different though, right? That the crisis mentality that Trump has created in this country means that I think there's a high likelihood that a lot of voters are going to be looking at their political choices through a very different lens than if Kamala Harris was president of the United States and Justin Trudeau was still going to be prime minister in that election. And so much has changed that I think there is a chance that the Liberals could win another government, that or the Conservatives could only pull off a minority. I think I've been on your show before. Months ago, I would have guaranteed a Conservative victory. I'm far less bullish now on that outcome than I was then.
Yeah. Okay. That's cool. So, what about? I just want to get back to this. All back to Donald Trump and who is the best leader to go about handling him on Canada's behalf. What are they? I get the Carney side of that potentially. What are they saying about the Pierre Poilievre side of that? What are the Conservatives doing wrong? What are the numbers showing you that they're getting? Because what I've heard is they're just going to roll over. So talk about that a little bit.
Well, let me give you an example. We asked a question on a survey a week ago, and we asked people, who do you think the leaders would have voted for if they could vote in the U.S. presidential election in November of 2024? And overwhelmingly, people thought that Trudeau and Carney and Singh would have voted for Kamala Harris. Very few thought they would have voted for Trump. But on Poilievre's front, more than half of Canadians thought he would have voted for Donald Trump, and a third thought he would have strongly supported him. And that's, I think, Poilievre's problem, right? Is that there's, prior to Trump and Trudeau resigning, the thing that held this big new coalition of Conservative supporters together was a common desire for change and a dislike for Justin Trudeau. That was the glue that held people who on a lot of other issues don't agree on things, right? Think about that core Conservative vote who voted Conservative no matter what the last three elections. And then these new voters that had voted NDP or Liberal or other parties coming over and giving it this like 45% that some polls showed they hit at the end of last year. The moment you take Trudeau out of that glue weakens, right? And then what Trump's done is this basically imagine a wedge being shoved right into the middle of that coalition that could be shattering it, because there are people in that coalition who absolutely despise Donald Trump. And there are some in the Conservative coalition who actually like him, who like his approach. He likes his disruptiveness. And so the Conservative coalition is now fragile in a way it wasn't. And that's creating a challenge for Pierre Poilievre, because when people are asking themselves, who can handle this? It's not just that he would give in to Trump, or that because he agrees with him on some things or might share a little bit of his worldview that he's not going to defend Canada's interests. But it's more about the idea that, and you mentioned Mark Carney can say, I've done things like this before. I've led the country through the financial crisis. I led the UK's financial system through Brexit. I'm made for crises. And Poilievre can't say that yet, right? And people don't believe that. And so the dynamics have completely changed. And so again, if we think about the fact that like an election is about like hiring somebody for a job, well, the job that we're hiring for has changed, I think, for a lot of people.
Fascinating stuff. David, keep up the great work. I really do appreciate you giving us access. I know you're doing a lot of mainstream stuff all the time, more and more, and you still make time for agriculture, and I really do appreciate it.
My pleasure, Sean. Have a great one.
Well, that does it for another edition of RealAg Radio here on Rural Radio, Channel 147, Sirius XM. Thank you so much for making us part of your day, wherever you may be listening, whether you're in the truck, at home, perhaps you've downloaded the podcast, which of course we thank you for doing. You can of course find it at realagriculture.com/radio. If you ever want to go back and listen to another episode, maybe you missed one, go back, go check it out. All right, I'll be back tomorrow for the Farmer Rapid Fire. Join me right here, 4:30 Eastern on Rural Radio Channel 147. Cheers, everybody.
Thank you for downloading this RealAg Radio podcast, brought to you by Focus Herbicide from FMC. Lentil and wheat growers get a clean start this spring with Focus Herbicide. Along with early burn-off and extended weed control, Focus Herbicide provides excellent resistance management. See your local retailer or visit ag.fmc.com/CA today.